Welcome back, you lovely people. Well, I did say we'd be back for our next video when we hit an important milestone or if something changed. I did truly believe that it would be announcing liftoff into Cycle Peak, but something has changed. So we need to make sure that we cover it, that we're honest with ourselves, and we try and figure out what lays ahead. So let's do that right now. Well, what is happening? Well, firstly, the crypto fear and greed index is showing 16 extreme fear. The last time we were down at these sorts of levels was over here. If we scroll across, this was on the 16th, 19th, 20th of July. What was happening around that time? This is the 19th, 20th of July. That was the bottom of the mid-cycle shakeout. I'm sure everybody here remembers the fear in the market around this time. Remember, everybody was capitulating, or many people were capitulating, including some prominent analysts and influencers. And when the final capitulation had taken place, then we began our next leg up. So that's interesting. It doesn't mean that we're not going to go lower. We'll cover that now. What is generally happening in the markets is that all financial markets are very fearful. We've had a very bullish year, 18 months since February, March 2020. We all know what happened then. And the central banks turned on the money printers. Everything has been up only. And now there is concern out there in the market around defaulting of Evergrande in China, the Federal Reserve beginning their taper. Are you going to print slightly less money potentially in the future? Or they've started that and maybe they will continue doing that. And this is just making its way through all of the markets and really impacting one another. So we don't know how long that's going to take to play out. We don't know if it's going to get worse. We don't know if we've seen the worst of it. Does it turn into another Lehman Brothers moment of 2008 where the whole system collapses? I'm not sure we're there yet. I think we'll see that in a couple of years. So, but we're going to have these panics in a high inflationary, volatile environment. There are going to be many panics. So expect them, expect extreme volatility over the coming years. This is the world that we live in. I want to talk briefly about the two ways I can see us making it out of here, but then most importantly, talk about our long-term plan. So we'll talk very briefly about the short term. We've had this sell-off from the peak of 69,000 and it's been 38, 39%. Now, of course, we have been saying since the very beginning to expect multiple 40% corrections during the bull market. So we're all mentally prepared for that, even if we don't want it. And even if we didn't expect this one to be 40%, because we hadn't gone up as high as we expected. I thought we were going to at least 80K. We went to just under 70. And just like the correction of channel one, we thought that may be a shallower correction, and it hasn't turned out to be the case. To be honest, it did look like it was going to be the case. This looked like it was going to be our recovery, but then the panic across all of the markets happened and it's taken us down 40%. So, okay, we accept that. We're going to deal with it. The two ways I can see us making it out of here. One, you'll see this sell-off to me looks quite similar to the mid-cycle shakeout. A bit shallower. The mid-cycle shakeout was 54%, but it's had this extreme capitulation like we had down here. This is the liquidation of leverage positions. And after that had taken place in summer, the market needed some time to reaccumulate. So in summer, from the shakeout, the capitulation, it took a couple of months in order for us to build a stable base. So are we going to take a couple of months again to build a stable base? Well, only time will tell. You can see this line I have in here, which was a mini line of repair. And maybe we start putting in another mini line of repair down here. And when we break that, that will be our first indication that we're going to the upside. And then when we break this, this is our key line of repair now. That'll be looking somewhere down here. And when we break that, we can confirm that we're looking for the next leg up. At the moment, that is unclear. The other scenario that could happen is that we may be bouncing. You know, we've already recovered from the low just under 15%, which is great. And that may continue through this week, and we may see a V. The angle that we've gone down is roughly like this, and we may see us heading back up somewhere like this. That would be interesting, and that will play into our longer term plans, which we will cover now. One thing I want to note is that sometimes external events will impact Bitcoin, in fact, quite often. And if you just look over here at the beginning of the events of the world in February, March 2020, when everything sold off, this was Bitcoin down 60%. It's not what was expected at that time. We were expected to go sideways, just like here in the previous cycle. And this is a V recovery. This happened very quickly, and we'd got back to the levels that we were at before within, I think it was 6 weeks or so. So even though that was a dramatic drop, Bitcoin reverted to the mean quite quickly. Are we seeing that sort of external type event play out now? And now we're going to recover quickly back to the mean within 4 to 6 weeks? Only time will tell. The water is murky at the moment. Things are unclear, and we can only wait and watch price and what price does. Let's zoom out for a second. Where are we in the grand scheme of things? Well, if we go back to this chart from Charts BTC, I started teaching the 4-year cycle over here. This was in May 2020. The price was about $8,500. And the white line didn't exist at that point because that is today's price. So we were looking at the price action in the cycle of 2012, 2013, and the cycle of 2016, 2017. And we were saying that most likely from the halving, the price is going to go up significantly because that's what it's done in previous cycles. And that makes sense given the supply shock of the halving of the miner's reward. Not everybody believed that was going to happen. Many people said that the halving was priced in. Some other people said we should expect diminishing returns, which we'll come to in a second. Some people said we should expect lengthening cycles. And our thesis was that we expect it to be roughly in line with 2017. The reason why we wouldn't expect diminishing returns is because Bitcoin is an exponential asset class. It wouldn't make a lot of sense unless Bitcoin's adoption is falling short. And time will tell whether that's going to be the case or not. So what have we seen since the halving? Now we have 18 months or so of data. Well, for the first half of the bull market, we were quite clearly an average of the two cycles. We were between the blue and the red line. We had our mid-cycle shakeout, minus 54%. That was an average of the two because it was minus 40% in 2017 and minus 75% in 2013. Since then, we've had, and we expected, 2 waves, 2 channels into cycle peak. We had 1, we had 2, and now we're seeing a deviation. This is where we need to be honest with ourselves. So 2013, we had 1 wave, 2 waves, parabolic blow off top into cycle peak. 2017, 1 wave, 2 waves, parabolic blow off top into cycle peak. 2021, 1 wave, 2 waves, right on time. This is when we're saying here, we're right on time. We were straddling 2017, we were above, we were below, increased volatility to the upside, increased volatility to the downside. We were expecting, like here in 2017, correction, parabolic blow off top. We have had correction, mini all-time high, and now a big correction. This is the first time that things are starting to look different from what we expected. People have been wanting to call the model broken all of this time for various reasons, and all of that time they've been wrong. But now the model is beginning to look different for the first time. So we need to be accepting of that. We need to be realistic. And now we need to figure out what we expect to see next, because we're now in uncharted territory. And that means we can't say anything with any degree of confidence. All we can do is lay out some options. And for me, there are three real options for us to consider. And the first one is that I want to come over here to the rational roots work. Now, this is a fairly complicated picture, and I'll link to it in the description. But to focus on the summary, the headline, what's really important is that this is a block-based model. And what the root is noticing is that the 2013 top here took place after about, I'm estimating here, but let's call it 60,000 blocks. Of course, the Bitcoin blockchain is run per block, produced approximately every 10 minutes, but it does vary. In 2017, the top was on 78,000 blocks. This was 16,500 blocks longer in 2017. So if we extrapolate that and take approximately 16,500 blocks longer in 2021, based on how quickly the blocks have been produced in 2020 and 2021, that takes us to between, he's calling it the 6th of February to the 10th of March. That's about a month window. And I've seen a couple of other calculations, and they're in that sort of region, February, March. We don't know if the market is playing off of a time-based model, which is us expecting a peak around the end of the year, which is likely not going to happen now, or a block-based model like the roots work. And we won't know until it takes place. But this is really good awareness for us to have, in that if we do measure by block and we take into account what happened in the previous cycles, we could be looking at a peak around the 6th to the 10th of March. So if we don't have an immediate V here up to a cycle peak, which at this point is looking unlikely, we would expect some consolidation, then we will pivot next to the roots work and look at a block-based model somewhere February, March. So that's option A. Option B is the work from Benjamin Cohen. As you know, we covered this when we were comparing all of the models out there. So this is our lengthening cycles model, or lengthening cycles thesis. And we should really ignore cycle 1 because this wasn't a full cycle. We're mainly looking at cycle 2 in 2013, cycle 3 in 2017. And if there was no red line there, you would suggest, yes, these cycles are clearly lengthening. They, since the bottom, 800 or so, this one nearly 1,200. And therefore the thesis from lengthening cycles proponents was that 2021 is going to be a longer cycle. Well, again, for the first half of the bull market, like we showed here, and during the mid-cycle shakeout, and during the first couple of waves after the mid-cycle shakeout, it didn't look to be lengthening too much. It looks pretty much in line with the previous 2 cycles. However, now that we're seeing a deviation here for the first time, we have to take into account that we may be seeing lengthening cycles. If that's the case, if we read Benjamin's work over here, he's saying this cycle could go deep into 2022 or 2023. So this is our second potential option if we are in fact not going to see a top around the end of the year, January or February, March, as per a block-based model. So that could take us into, like Benjamin said again, end of 2022, beginning of 2023, still expecting some sort of top. And I'm not talking here about price because I want to keep it focused on when we would expect to peak. But just a quick note in that Benjamin and others do believe that we're going to see diminishing returns. And I'd just say that they're mutually exclusive. So if we saw a top in 2022, 2023, for me, there is no reason to believe that it may be diminishing returns or matching returns or increasing returns. If we go longer, we could go higher, or Benjamin and others may be right and it may be lower. That for me is open for discussion and debate, but the lengthening cycles model would take us deep into 2022, early 2023. So option A is February, March, option B, end of 2022, 2023. What would option C look like? Well, Willy Woo, who many will know out there, what he's been saying is that he believes that the halving cycle is broken already. He doesn't believe the halving of the miner's reward at the halving is going to make a difference going forwards. And that what we're now going to see, using his words, is a drunken walk to $1 million. And what that would, I'm just going to draw a squiggle, and I can't even go as far as I want to. Just like these channels that we've had in here, he is suggesting that we're going to see something along these lines. Essentially, that is impossible to predict exactly what it will look like, but it's going to play off of general supply and demand and macro dynamics and market behaviors. We're going to see lots of mini bull markets and bear markets, much like we've seen over the second half of this potential bull market. And essentially, over time, Bitcoin does continue to pull in the world's capital, but we no longer have a 4-year cycle. We no longer have any sort of real programmable or predictable style. We're just watching Bitcoin appreciate over time as more and more people wake up to the fact that there are only 21 million Bitcoin in existence, and it is a game of trying to get as many Bitcoins as possible before it's too late. So they are the current options that I see out there. That is, just to recap again, maybe we have a V and we have a peak in January. It's probably unlikely at this point. If we don't, a block-based model taking us into February or March, a lengthening cycles model taking us deep into 2022, early 2023, or Willy Woo's drunken walk to, let's call it, the moon over time, because fiat has no bottom, Bitcoin has no top. So to 1 million plus over time on an unpredictable time frame. In terms of our strategy, the strategy doesn't change. The reason why we set up the exit strategy the way it did is to keep it really simple. We are only looking to sell Bitcoin into a parabolic blow off top. If we get the price action that I've laid out in the exit strategy, which I'll link to in the description, make sure you do go and watch that again, because if that does take place, we're going to be best prepared to handle it, whether that is January, whether it's February, March, whether it's end of 2022. And in Willy Woo's, it most likely wouldn't happen. And that would be fine, because you would be holding the best performing asset of all time forever. And why would you not want to do that? Why would you want to hold anything else if Bitcoin is doing a drunken walk to $1 million plus? If we do get a parabolic blow off top and the indicators laid out in the exit strategy, we'll be ready to take advantage of it and to sell into that top and to buy into a bear market. Because if we do have a parabolic blow off top, we would have a bear market after that. So that's the way I see the world at the moment. Things are unclear. The time is now to hodl. The time is now to study, go back, learn about the fundamentals of Bitcoin, read the Bitcoin standard, rewatch the exit strategy video, rewatch my plan B video, which I'll link to in the description. If you do have cash on the sidelines or other assets, now is a great time to be dollar cost averaging, just as it was down here during the mid-cycle shakeout. We don't know if this is a low, we don't know if we go lower, and we don't know how long we stay around here for, and we don't know what happens next. So we have that awareness of not knowing, and we'll be watching it together. As things become clearer, I will be doing more videos so that we're all, and just know that we're all in this together. So thank you very much for supporting, and I will talk to you soon.